Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry. Today is Friday, May the 8th, and the time is 2:30 a.m. GMT. Today we'll be looking at the chart of the US dollar yen here. So we can see in this 45 minutes chart, we can see with 3 right here and with 4 right here. So what that means now is that even though it's only a partial view, we can conclude that this is currently in some sort of 5 ways down, in which we end the wave 3 and wave 4, and now that means we are within wave 5. And within wave 5 here, it should subdivide in 5 waves. So we have a wave 1 of 5 ended here, and this is the wave 2 of 5. And now as long as we stay below here, we can continue to the downside in wave 3 of 5, resuming the downside here. Okay, so a couple of things here to sort of clarify. All right, so you can see here with 4 overlaps with 1. Now that is not really violating the rules. In Elliott Wave theory, you can have an overlap whenever there is a diagonal. Right, diagonal in Elliott Wave theory can be 53535 or 33333 in the sub waves, and it can happen within wave 1 of a larger degree or wave 5 of larger degree. So in this case, it happened within the wave 1 of the larger degree, so it is allowed to have a diagonal over there. Now in fact, within wave 1 here, it is also allowed this blue here. In fact, it can also have an overlap, but in this case we don't have an overlap here. But in the rules allows this, even this, to have an overlap. The one that cannot have an overlap is if the 5 waves is within wave 3 like this. Now that cannot have an overlap. All right, so within wave 1, within wave 5, or within wave A, within wave C, it allows to have an overlap as a diagonal. Alright, so now let's check out a couple of possibilities here, right? Alternates and all those things, so that we are aware what we are dealing here. Now first of all, until we break below 1 in black, so technically we still can do a double correction, right? So this can still be something like this, a WXY double zigzag before turning lower. Okay, so until we break below here, that is still a possibility. So number 2, but even if it is doing a double zigzag, as far as it stays below 107.5, technically it still can go down again after that, even if it does a double correction. Now secondly, we're going to take a look at the larger degree and see what will be some of the alternates here, because I think this pair, the market right now is very sideways everywhere, whether you're talking about indices, US dollars, yen, wares, they are all kind of sideways right now. So it's a lot of choppy move all around the market, so we need to be aware of some of the other possibilities here. So short-term possibilities, like I mentioned, it can do double zigzag before turning lower. Now even in the larger degree, there is also some alternates as well, but I will let you know what we need to observe, so we know if the alternate is the one playing out. So we zoom out in the 4 hour, and remember this is 3 and 4, so we are in some sort of wave 5. Okay, this is the 3 and 4, this is the 4 hour chart, the same 3 and 4. So we end this with 1 here. Now first of all, if you look at the 4 hour chart, this is impartial. It's not a complete count, but it's good enough for our purpose. If you look at it from March 26 high, you have what looks to be an impulse here. So for sort of this could be technically could be with 1 or with A, but I think we're just gonna call it with A for now. I think this is sort of like the minimum sort of pattern target approach, calling this as a with A, and then this is your with B as a flat. And so what that means is now we are within with C in blue, and with C should subdivide into 5 ways. So that's why you got 1, 2, you got 3, 4. Now whenever you have a ABC like this, ideally, as you know, the C ideally reaches the 100%, right? So the 100% is 104.8. So ideally we still can see for the downside. So you do have a lower low sequence in which the third swing, it has not reached equality to the first swing, right? So ideally, it still can see a little bit more downside, but sometimes it may truncate, right? It doesn't always 100% go to the 100% go to the equal leg in this case. So how do we know, for example, if the pair doesn't go lower anymore and instead is maybe ending this? Because honestly, as far as alternates go, I can call it completed if I want to, because I think I can just adjust the count like this. For example, this is 1 2, all right, and this is 3, this is 4, and this could be our 5. Now you might say, well, 4 and 1 overlap. Well, that's allowed within with C. And you might say the 3 here doesn't look to be the longest, but the rule doesn't say with 3 has to be the longest. It only says with 3 should not be in the shortest wave, right? So even though with 3 right now is shorter than with 1, this is allowed as far as with 5 is shorter than with 3. So I think this one really is not really violating any rules here. You can call this some sort of a wedge, diagonal here, and then you can be completed. So then the question is, so how do we know if we're not gonna go down anymore? Because I can come up with this alternate count here for now. We will suspect this alternate will come into play if US dollar yen starts to break above this wedge-like structures here, right? So if the US dollar yen starts to break and close above this, then you would suspect, okay, maybe the cycle is over and we will not go here any longer to 104, and we will at least then starts to correct this entire decline in a bigger 3 ways at least. All right, so that's how we know whether we are still going to expect more downside or not. So if it does, like I said, if it does a double zigzag, technically it can go to the next 100% like this. And if you measure, okay, assuming this is WX, all right, if I assume this is WX, right, the 100% is going to be 106.9, 106.9, and then going back to the 4-hour chart. So 106.9 is at the top of this wedge-like structures here. So it still can do double like this to 106.9, retest that same trend line, and then break down again, right? So in other words, let me, yeah. Initially, this is not the count, so it gets, otherwise it will get confusing. All right, so this is 1. So we still can do with 2 here, doing a double zigzag, and then retesting this one again. And this is the original count here like this, right? And still break down, right? So the idea is to keep pushing it to the downside until it reaches the 100% of the AP in blue. But if we start to really break above this descending line here, then at that point we need to consider that this can potentially truncate. And then if it truncates, then I have already shown you how to possibly label that, okay? And if that's the case, then we can start to see a rally in the US dollar yen. But in the meantime, as long as we stay below this trend line, we still, and as far as this pivot 107.5 is still holding, we still can see for the downside to reach this area. All right, so that's the idea of US dollar yen here, guys. I hope you enjoyed. Please do like and subscribe if you enjoyed the video. And as always, we do have 14 days free trial. If you want to try our service, feel free. The link is provided in the description of the video below in the YouTube, as well as we also will have a seminar tomorrow, and you can also find the link to the seminar to register for the seminar if you want. Tomorrow we will talk about Elliott Wave as well as market correlation, how to use market correlation in Elliott Wave theory, okay, as well as talking about sequence as well. All right, so have a nice weekend everyone, and see you all again.